Take a look at LAPO Microfinance. You wonder, what is LAPO Microfinance? The microfinance part of it, you most likely would know what it stands for, but LAPO is an organization that seeks to implement a framework that will support its evolution into a truly sustainable microfinance institution, which is often given the acronym MFI, both locally and internationally. It desires to possess a clear understanding of environmental, social, governance, and technology issues and the impacts such have on its economic and financial performance. I will not give all the details because it is not my responsibility to do that. So I will let Mr. Godwin Ehigamoso, the MD, the Managing Director of LAPO Microfinance, to explain to us. Good morning and welcome to Sunrise.
Thank you so much.
Okay,
I'm glad to be here.
Yeah, from what I've got in terms of information, it makes for an exciting reading. What is LAPO out to achieve?
LAPO stands for Lift Above Poverty Organization.
Lift Above Poverty Organization.
And that is like a mission statement.
Okay.
But LAPO as an institution is focused at assisting persons, especially at the bottom end of the society, to enhance, first of all, their capability to increase their income through provision of financial services. LAPO also involved in assisting its clients, usually mainly women, to also be able to have adequate information on health issues, particularly for them and their children. And lastly, LAPO is also involved in promoting social empowerment. So at LAPO, we conceptualize poverty as an octopus with different tentacles. Tentacles of material deprivation, tentacle of poor health, tentacle of social exclusion. And therefore, LAPO is structured in a manner using microfinance, which is the main operation, social empowerment and health awareness to address those challenges.
Oh wow, very interesting that you said all of that in one statement. But let's look at 2005. There was a landmark in terms of CBN launching microfinance policy, and since then so many microfinance companies have sprung up. Now, if we're to look at LAPO, what is it you're looking to do that is different from what everybody else is doing?
Truly, I think LAPO in many ways is different. First of all, LAPO has been in existence for more than 20 years as a microfinance institution, but operating as an NGO. Therefore, LAPO simply has been in the operation of providing
pretty much evolved from an NGO into a business.
So when the microfinance policy was formulated and launched in 2005, most community banks and microfinance institutions like LAPO converted into a regulated microfinance. So in 2010, LAPO officially set up a regulated microfinance bank, and in 2012 obtained the approval of the central bank to be a national microfinance bank.
So what's your client base then?
LAPO at the moment has 1.2 million clients in 26 states of the federation.
26.
And you have said that the majority are women. Why is that so?
Yeah, I think it's quite clear. I also want to add that there was no point in time we made a statement that we were going to focus exclusively on women. But that we do that is the reality of development. It's development reality. First of all, in our environment, women tend to be more of victims of poverty than men, relatively. In most cases, you have, when you see, for instance, a poor man is most likely to be a husband of a poorer woman, in the sense that in our environment, women marry up and men marry down. Secondly, as a poverty eradication program, we also believe that if you empower a woman, in this case a mother, with finances, with social empowerment programs, you're likely going to empower the entire members of the household. And therefore, we felt that we wanted to direct our resources, limited resources, to where the problem of poverty is more acute.
So what would you say is your greatest challenge as an organization?
Well, for an organization like LAPO that has been around, and looking at our operating environment, there have been several challenges. And each of them has come at a specific stage of our development. At the beginning, over 20 years ago, the challenge was really convincing people, as the clients, to believe and accept what we were doing. There was this feeling that LAPO was too good, to be true. In the sense that as a non-profit organization, we were providing credit, as we still do, without collateral. So people didn't thought that it was possible.
What level of credit? What kind of credit do you give without collateral? Are we talking
what's the maximum?
Naira?
Okay, at the moment we do, if you come in for the first time, we do 30,000, a little more than that. But the important thing is that for clients that have been with LAPO for several years, they assess, volume that is much higher. But the bottom line, what flows across all, is the fact that in microfinance, we do not accept collateral.
Okay.
That is a defining feature of microfinance that sets it apart from the conventional financial.
So what level of risk are you exposed to, and what's the result you've had? What's the return that you've had in terms of when people take loans?
Let me quickly just say this. At the moment now, we do an average of about 7 to 8 billion naira every month.
Billion?
Yes. So
Are you saying million or
billion? Take for instance, in
Giving 50,000 naira?
Yes. In 2013, last year, we did 62.2 billion naira. So I'm trying to underscore the fact that there is risk, and then how do we mitigate those risks? The first thing in conventional lending is the issue of collateral. The rationale for collateral is simple, that a credible threat to a seizure of your asset that you pledge could act as a motivation for you to repay. That, for me, is the rationale behind the demand for collateral by conventional institutions. But for microfinance, microfinance essentially disregards requirements, collateral requirement. One is the fact that the average users or borrowers do not have those collateral. So requiring collateral for these women, for instance, is demanding from them what in the first place they do not have. The second thing the microfinance institution or bank will therefore address those challenges by creating a motivation for repayment is to use other strategies. For instance, a typical microfinance bank, or what I would look at, the classical microfinance practice, will require that you organize your borrowers into groups. In a way, there is that pressure on each other. And prompting them to make repayment. I quickly want to also add that with all those volume we do, our repayment rate is much more above 98%. And in the banking language, a non-performing ratio, the proportion of our non-performing loan is less than 2%, which is quite excellent. It looks unusual in conventional lending, but
with that volume that you have in terms of facilities,
yes,
you're saying it's still 2%?
Of course, yes.
How do you manage that?
Okay, I need to also quickly add that it has not always been like that. At the beginning, about 15 or more years ago, it was not as good as that. But again, we took several steps to address that. The first thing we did was simply to turn what I call the mirror of blame, around to ourselves. Ordinarily, lending institutions tend to take the mirror of blame to the borrowers. If a borrower is defaulting, the borrower is bad, it was bad. And at a point, we decided to say, if we have a defaulter, then maybe we didn't do it well. we take the blame.
Okay.
And so we decided to do few things. For instance, we decided to look at the process of assessment, appraisal of our loans. We look at the entire training process, not only for our borrowers, but even for our officers, our client support officers. That's what we call our loan officers, client support officers.
I beg your pardon. You train the borrowers as well?
Of course, yes, we do. In microfinance, that is also important when it comes to microfinancing. Again, it sets it aside apart from the conventional lending. Microfinance borrowers are low-income people usually, and in most cases, you need to enhance their capacity. First of all, to understand what you are doing, what the rules are. For instance, in LAPO as a non-profit at the beginning, what we are, what we are not. That we are not a church, we are not a charity organization in the real sense of the word, but
not anymore.
We are here. When we say charity, we are here in the sense that we realize that you do not have capacity to engage commercial banks for financial services. Therefore, we stand between you and the financial. We provide those financial services to you, but you therefore have the obligation to meet in terms of making repayment. So, what therefore it looks very unusual, but for microfinance using the right procedures, it is possible to record that's the payment performance level. It's also possible to reach a very large number of clients.
Is microfinance all about just savings and loans?
Again, I think this is also something we need to look at closely. Financial institutions, conventional financial institution will want to deal with you as a customer. In most cases, their relationship with you will be by your account numbers. But in microfinance, you need to go much more beyond that. Because realizing in the first place that lack of fund is not only the challenge these poor people do also contend with. They are very vulnerable by the nature of their status, situation. Therefore, you need to look at issues around health. Just providing some tips on health issues. You need to also look at their own attitude to life. For instance, a poor person, particularly a woman, is likely going to be having low self-esteem. You need to do a lot of training, sensitization, to think that yes, you have potential. So you need to also look at how do they manage their risk. Like I said, they are quite vulnerable. So putting all this together should be the responsibility of a financial institution that want to effectively engage low-income people.
Okay, so as part of wrapping up then, how do you see this sector? Because when one reads through what's happening across Africa and you look at what is happening in a place like Kenya in terms of microfinance and how they're getting into the rural areas and establishing opportunities for people with very small businesses and business ideas, how do you see the future of microfinance in Nigeria and how it will impact on our economy?
Very, very bright. Okay. I'm optimistic. What would be the basis of that optimism? First, we have a large population. Here we have a large population. And a very large proportion of that will be people who will access financial services from the microfinance institution. Secondly, though also related, is the fact that here we have people that are exceptionally enterprising. I have had the opportunity to visit most of these countries. And I have never come across where you really have young people, women, getting up very early in the morning, going about their businesses, looking for what to do and all that. So if you have that situation, if you have that condition, then it is a place for microfinance to really go. Thirdly is the fact that looking at the central bank microfinance policy and regulatory framework, including the supervisory guidelines, yes, there could be some area that needs some modification, but to a very large extent, it contains clear features or provision that will support the growth of the sector. For instance, I think it is only one of the very few policy documents across developing countries where you have a training component, certification component, when the operators, particularly the top management of microfinance bank, are required to undergo training and sit for examination and be certified. So I think that if we continuously do that, building a large a pool of professionals, the microfinance industry in Nigeria has a very bright future.
Well, on that note, we have to bring it to a close. We really appreciate that. It's good to end on a note that says bright future for microfinance in Nigeria, especially with LAPO. Remind us again, Lift
Above Poverty
Organization. Lift Above Poverty Organization. That's great. Thank you very much, the Managing Director, LAPO Microfinance, Mr. Godwin Ehigiamoso. Thank you very much for coming on Sunrise, and we wish you best of luck and hope that Nigerians will take advantage of it. Sunrise will take another short break, and then when we get back, just before we get on the home stretch, we will be having a very interesting conversation. But we have a report that we'd like to take. All hopes of having the 2014 budget passed by the National Assembly were dashed during the week as the two legislative bodies are yet to agree on it. The appropriation bill passed the second reading at the Senate yesterday, but not without some reservations by some of the members. However, at the lower chamber, the bill suffered a setback as debate of the draft law was brought to a halt after two members presented opposing views on its consideration. Consequently, the Speaker of the House, Aminu Tambuwal, has set up a 6-man committee to look into the views and present a position to guide the House. On our focus on the economy on this program this morning, our business correspondent, Chimeze Obiwago, takes a look at the implications of this delay to the economy. Let's take a look at that.